Maximize here from Raises.com. And today I'm with Abdiel Lewis from Arch Capital. And we're going to take a quick deep dive into his background and some of the types of transactions and the scope of what he's working on. And then we're going to learn about some of the ins and outs of the capital raising space from his perspective and things that he's learned and things that he's accumulated along the way. So yeah, we're offline. We just had an interesting convo talking about talking about some people that you actually met and so on, or had connections with. But before we get started, can you just tell the folks here about your background and some of the things that you've worked on and where you're coming from?
Yeah, absolutely. So a couple of things that I've been involve anything from startup with on the technology side as well as real estate. But over the last 10 years, I found myself diving into real estate more and more, and then involved in syndication, both as lead partner as well as general partner. Bought a few investors to date. I've done about 7 deals, 3 as lead partner, and then the remaining 4 on both sides, GP as well as general partners, including from those 7 deals, we've exited 3 of them, record breaking. I mean, we always like to be very conservative when we project returns, but these were projected around 16 to 18%, and we exited all 3 deals between 19 and 21.2% IRR. So I think our investors are very pleased, and they like to come back and invest with us overall. So, and the reason I mentioned syndication as well is, as we do more syndication, it's always come down to equity and capital. Every deal that we do, we need to raise equity and take those deals down with my partners. And it comes to us about 1.5 years ago, 2 years ago. How do we create a fund and then be able to leverage the fund to diversify our portfolio, but also to provide better ROI on equity and better terms for our investors. And some of the benefits with having a fund is allowing us to invest in multiple projects throughout the Southeast, Southwest of the US, and be able to partner with operators, experienced operators we have worked with personally over the last 7 to 10 years.
That's fantastic. And I mean, it's pretty vibrant, and there's obviously, I mean, you're obviously getting results for the investors. You're talking about 19%. So I guess along the way, along your journey here, I guess what is the number one, I guess what would I say, what is the number one, in terms of your background, the number one piece of advice that you would have for somebody who's looking to, number one, find investors, and number 2, get results for them to the level that you've been able to achieve here?
Well, that's a very good question. So I don't know if there is a one thing, because it's like learning to ride a bike, right? Because you buy the bike doesn't mean that you know how to ride the bike the very first day, right? So so it's a process. So I think the first thing I would say is understand the sector that you're getting into. If you're getting into real estate and you want to do syndication or you want to raise capital, then start by learning and understanding what investors are looking for when they are looking to invest in a particular project, whether that's construction or whether that's development of mixed use or whether that's acquisition of multifamily for repositioning or light value add. So these are the things I would look at, and then understanding the terms. Anything from average return, what does that mean? Preferred return, what does that mean? Cumulative return, what does that also mean? And then also look at the construct of the general partners. a lot of those deals, often the numbers do not lie, but if the trust or the relationship between the general partners and the limited partners is not trusted or is not easy to work with and have a track record and credibility, then yes, you may be able to make money, but ultimately you would not have a great experience. And I think for me, I look at the team behind the project. Of course, I look at the numbers. I have to analyze the numbers. I have to look at the exit strategy, the business plan. But at the end of the day, the business plan does not execute itself. It's the people behind it. So that's also a big part of my analysis and how we move when we look at projects.
Got it. Makes sense, especially when you're talking about value added, especially. So going from there and talking about now, so what are some current either projects or initiatives that you're working on raising capital for right now?
So right now, over the last 6 months, we've been heads down, focusing on 2 funds. So we launched a high income growth fund last month. That's a $100 million fund. Targeted yield is 18%. The asset type we're targeting is commercial mixed use, multifamily real estate. And then that fund, particularly the $100 million fund, focused really on high growth, like I mentioned, and also tax advantage growth, where we are raising capital and then we are partnering with experienced sponsor we have invested with in the past 6 to 10 years, and taking an equity position as well as a GP position or co-investment, basically, for a shorter way of saying that. So we'll co-invest alongside of them. We'll be part of the management team. And then the second piece is that with COVID, what happened in the US is that around the world, most smaller boutique or smaller asset managers or operators did not have enough reserve or did not have any sensitivity analysis into the underwriting should something like COVID happen or unexpected like this happen, and be able to weather the economic downturn and the economic occupancy. I didn't say the economic occupancy is actually different than physical occupancy. So, and I'll explain. With economic occupancy is how much you're collecting and rent or cap or return based on who's actually paying for the asset or the lease. Physical occupancy deal with, okay, well, I may be 90% or 99% occupied, but 10% of those tenants or lessees are not actually able to meet the obligation. So therefore, you have a discrepancy. So we saw an opportunity. Therefore, we create a second fund, which coming online January 1, 2022, and that's an impact fund. And that's impact fund focused on passive income and measurable tax saving. Target yield is 10%. And that's focused on the workforce housing, multifamily, single family rental, real estate. And the idea is a lot of those operators or inexperienced operators, their loan are in defeasance, and the bank will be calling those loans, and they are going to be forced to sell or liquidate, to exit. And this is where we come in. With equity that we are raising, we'll be able to go in and acquire those assets at a steep discount, and then put new management in place, inject some capital to reposition and continue where they left off, and exit. So what that does is now we're talking about a triple factor, whereas not only we're buying at a low discount, um, and also now we're able to inject capital to turn around the asset, and we're going to be able to exit at a higher equity multiple. We're talking 2x multiple and up. So that seemed to be another area of opportunity that we see coming up in 2022. And we wanted to take advantage of that and allow both retail and institutional, both retail and accredited investors to participate in our fund to be able to invest, but also take interest into this sector or project that we're involved in.
No, fantastic. Yeah, because the first one seems to be more about just leveraging high growth and taking advantage over some of the tax opportunities, and then the second one is more playing with the management there and then looking for arbitrage there, right?
Correct.
Oh, awesome. Yeah, and just offline as well, we're just talking about different conferences and opportunities that you were a part of, and I mean you are a Raises.com member, and so how has the Raises.com membership been to you and your team?
Very good, very good. I remember the very first time I saw your note, and then I reached out and we talked a few times and trying to do some due diligence on Raises.com. I think back then you guys had a different name and you rebranded along the way. But overall, I think that for my co-founder, my partner here at Arch Capital, and myself, I think Raises.com has become invaluable to what we're doing, and I'm going to explain that. If we need advice, we can reach out to you or to your team. We've on several instances. We've had your team underwrite some of our deals, which is very unique and have great feedback on a project we're working on last minute. And then on other instances, including now, we've been able to connect with many mastermind members and have several warm introductions. And when we say warm introductions, these are direct decision makers who can actually tell us, yes, we can help, no, we cannot help, but we can provide a referral. And those referrals actually had given us even greater ideas and also provide other structures and way of being more creative in our raise for our funds that we did not think about prior. So overall, I think Raises.com is truly a strategic partner, and we're trying to take advantage of that every time we have a need or when we need to discuss different ways of structuring deals and raising capital and leveraging the backend solution you guys have as well to pull new investor profile.
Oh, understood. And when it comes to, I'll use the term you use, taking advantage, because there are a lot of people that are coming to Raises.com. Some are ex-Merrill and they're more advanced. Some are just fresh and they've syndicated their first few deals. And so seeing all the things that you've seen and experienced up to now, not just Raises.com, but just in general, how would you advise somebody to take advantage over both the knowledge that you've learned and also the resources that are available in the market to actually set up their fund and raise for their fund, especially when it comes to multifamily real estate?
Yeah, no, very good question. So I think in the process, when you join, there is step you follow, get the basics, what the documents are, who to reach out to if you have certain type of questions. And then my favorite is participation into those weekly calls or bi-weekly calls, Monday and Wednesday, and be able to discuss and exchange ideas. And it's almost like the hot seat. So you provide your plan and you get grilled live, but everybody get to see it and then see areas that you can improve, but also understand the other set of conversation that should happen, that the partners in your organization, the partners on your team should be asking. And often, people from raises.com will chime in, or people from the mastermind will chime in. There is a great wealth and breadth of knowledge and folks available to help. So I think that would be the first thing, get the basics out, understand where things are, who to reach out. And then once you get past that, then it's a matter of getting introduced to other folks. If someone is good with, debt instrument and someone else is good with equity, equity raise or capital raise or mezz or legal aspect of the deal, then reach out and you get quickly introduced to someone versus trying to figure it out yourself and spending days in agony. I think one phone call, one email, you'll get an answer. So time is very fleeting, but also time is essential. So we try to manage our time the best we can. And any type of investment require partners. And even through this mastermind, where you lack experience, you'll find someone who has the upside or someone who has the experience, then just partner with them and take down deals. Start where you feel comfortable, but also I would say start big enough where institutional capital start to notice you, because that's very important. And once you start having those conversations and building relationship with institutional capital, you're able to speak their language and understanding their mandate. Then you start thinking like them. Then you start looking at things differently. Then you start getting calls. Hey, do you have deals? Can we work on these deals? Let's partner on either raising the debt or raising the equity, or maybe coming on board as an asset manager. So all of that is things that that you learn over time, and you gain experience as you go. But I think if you want to do shortcut, is having those one-on-one conversation outside of those biweekly calls with members of the mastermind, and also be active. Ask questions. No question is stupid. Just ask questions, and reach out.
Yeah, no, good points. Good points. Especially when it comes to asking questions, because the thing is, like, nobody knows everything, and part of the reason why consultants bring people in who don't know everything is because if they knew everything, then they'll be able to raise billions. So that's the point of even asking questions. And so that's good advice to be taken from the community. So now we know a bit about your career, the deals that you've done, the deals you're working on now. And so what's next? So in the next, let's say in the next 6, 12, 24 months, what are you looking to achieve, and how does the future look like for you now?
Well, that's a very good question. So we're excited about what's the next 12 months look like. So right now we're at 10% committed on our high income growth fund, which the $100 million fund that we're raising capital for. So by Q1 of next year, we're anticipating to hit 1/3 of the raise for that first fund. But the impact fund, what transpired is that when we soft launched the impact investing fund, and we were at a family office club event in Dallas. We were I think surprise is not the right word, but I think the interest we received was equally the same as the high income growth interest in that fund. And so we so far have already been engaged, even with some public official in Dallas for the impact fund, but we'll partner with some sort of public-private partnership where we'll be assisting in providing equity, and then we're also looking at a model where the fund can actually leverage existing asset that could be either lease or or change hands over to the fund, and then be part of the impact investment program that we're looking to do as a model. So these are new things that we're seeing, and we're excited about. And then we also see that because we design, and the structure we have for the impact fund is somewhat different than the high income growth, because the high income growth is a Reg D fund, equity investors only. But the Reg A plus for the impact fund allows both accredited and non-accredited investors, meaning that retail individuals can invest can invest into the fund very easily, and now they have a piece of they have a part of something bigger than themselves, which is impacting different areas, but also at the same time do well while doing good. And I think that's what we're excited about, that, and see where that goes in 2022. Essentially, the MSA, when I say MSA, it's a term that we use in real estate. The MSA specific areas in sub-markets, I think is going to benefit greatly from that. And we anticipate that one to probably take off at a faster pace than the high income growth in terms of what we're doing.
Awesome. And that seems, yeah, because that seems to be more of the long-term plan, because when you align, when you get people doing well and doing good, and I don't want to divulge into the details, but because the Reg A versus the Reg D, they're different things, and it's more like a mini IPO. There are different opportunities there as well, right?
Yeah, correct. So yeah, the tech, yeah, like you said, we don't want to get too much into the technicality, but otherwise we'll spend the entire night in talking about that, which is fine, and I enjoy this kind of conversation. But really, a Reg A plus is really like a mini IPO, giving folks and investors a different way of impacting their neighborhood, and so on. And it provides the same return, the same tax, even more tax advantage if you look at where we are investing and what we're doing. But essentially, if you're doing well, do good, but at the same time, make some money.
Yeah, why not? Why not? And like a lot of deals like this, they always, these shareholders almost become like the quote unquote, I don't want to say customers, but everything seems to be aligned in terms of mission, especially when it comes to these mini IPO type setups.
Correct.
So, yeah, and so if somebody wanted to inquire about these opportunities, or they wanted to learn more about, I guess the types of transactions that you're working on, how can somebody get in touch with you?
Absolutely. So anyone can reach us and call anytime to talk to us. We're very open and transparent about what we do. And we'll be happy to sit down and tell you about what our fund mandates are, but more importantly, you as the investor or you as a potential partner, we want to understand what's in it for you, what's your goal, what's your vision, and what you want to come out of maybe a potential investment with us. So if anyone wanted to reach out to us, they can simply go to archcapital.ventures and go to contact, and then you'll find my email, aluis@archcapital.ventures, or my partner's information is also on there. Our team info is also on there. But once you go to the website, it goes over what we do. It goes over our investment opportunities, as well as an FAQ that goes in details about why invest with us, and our strategy, from our mission to our experience to unique markets we're focusing on, and as well as our process of vetting projects in order to preserve our investors' capital and so on. So I think the website is the most effective way of reaching out to us and connect with us.
Perfect, perfect. And with that, Abdiel, I really enjoyed the conversation. Yeah, and every time we chat, there are always like a lot of nuggets that I gain from the conversation as well. And obviously, the other members really appreciate all the insight that you're bringing into their deals as well. So it becomes like a feedback loop that really everyone is benefiting from everyone else. So again, I really appreciate it. And are there any last pieces of either advice or anything that you'd like to share to the community overall as we go?
Yeah, before I go, definitely, I think I appreciate the time. Thanks for bringing me on, and we would like feedback. If you guys wanted to let us know what you think works on our website or what we're working on, we are open to feedback. Like I said, 100% transparent, but also do not hesitate to reach out. I know a lot of folks reach out on the back end and online, and that's fine. So I'm pretty much on all the medium available as far as this group communication. So, and if you don't hear from me, I promise you guys that you will hear back from me within 24 hours. I always tell people that within 24 hours, you'll hear from me. I'm either up in the air, but or flying somewhere or about to land somewhere, but definitely we'll reach out and then start having a conversation and go from there.
Awesome. So let's do good and do well. So this is Arch Capital. This is Abdiel Lewis, and we really enjoyed this one. Thank you so much.
Likewise. Thanks.
Cheers.